The Fed's decision is the big event of the week. Investor bets are for the central bank to pause hikes for the first time in 18 months. What does the street expect ahead of the event? Sometimes you do get a little bit of dichotomy between the CME FedWatch tool and the rhetoric. Let's get to Yahoo Finance's Jennifer Schonberger for the latest. Good morning, Jennifer.
Good morning, Julie. Investors expect the Fed will take a breather at its policy meeting this week. But as you mentioned, there are divisions on Wall Street about whether the Fed will be done hiking rates or whether this meeting could constitute a skip versus a pause. Take a look at the Fed funds futures this morning. They're pricing in nearly about a 75% chance that the Fed will maintain rates at the current level of 5 to 5.25%. Most banks on Wall Street are predicting a pause, including Morgan Stanley, Wilmington Trust, Bank of America, and Goldman Sachs. Wilmington Trust's chief economist Luke Tilley says the consumer price index due out on Tuesday is just about the only thing that could knock the Fed off of a pause for this meeting. And while most major banks are predicting a pause, there are some outliers who still think that the Fed will hike by 25 basis points. Notably, Citigroup economists are expecting a 25 basis point rate hike, though they note it is going to be a close call. Now, what the Fed does afterwards is still up for debate. Morgan Stanley's chief economist Ellen Zentner says she thinks the Fed will pause at this meeting for good and hold rates at this level until the first quarter of next year, where the Fed, she thinks, will begin cutting rates. On the flip side, Bank of America and Goldman Sachs, rather, think that the Fed has just about one more rate hike to go, likely in July. We will get the Fed's latest expectations for interest rate projections at their meeting on Wednesday, hopefully offering some more clarity on just about how high rates could ultimately climb. Back to you.
All right, Jennifer, thanks so much for breaking that down this morning. Appreciate it.